Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Alright, let's get rolling along. Rolling with the homies. Let's see, where are we at and what are we doing? Oops, kill that volume. There's a commercial. There we are. Alright, there we go. We can hear our voice. That's a good thing. Let's put up the fact check spreadsheet. Right there. There we go. And scroll it up a little bit, like so. And the only one that needs to be fixed is this one right there. Crude oil is still in a buy. So we'll put that up on the, let's see what we'll do. We'll shift this over. All right, we're going to leave it there. That's a good spot for it. Why not? And let's see if we can find the crude oil and do the recount on it. I saw that this morning sending it out. So this is a 3 days in a buy. That's what it is. There we are. Right there. Alrighty. And now we'll jump back to the currencies and we'll slide our way back to commodities as we do our rhythm, as I said, unless someone says something and then boom, we stop what we're doing and we get involved in that. That's which is always more funnish as far as I'm concerned. Okay, right there is the Swiss. You can see it on the J4X right here. Let's close that. There like that. You can see that there. And then I think I have to move this over just a little bit, like so. So you can see the numbers. There we are. I do want to put it up top. Let me do that. Move it up top there. Where's that at? Right there. And let's move that up top. And we'll find a way to get it there. Like so. There we are. Now we're happy. Ta-da! Alright. And so there's the Swiss. You can see it's going down, which means the dollar is going down. A little pressure there this morning. Interest rates have fallen from the 1.66 on the 10-year back down to like the 1.61. Supposedly the auction yesterday or the day before, I guess now, it was so positive, I guess you could say. It always, to me, it's always funny in a quantitative easing era that we hear them say stuff like that. You know, it's like somehow or another they kind of pretend that the Federal Reserve is not buying bonds. You know, it's just Jane down the street, and it's the guy that owns the gas station, and it's all those mutual funds, and yeah, right. And they never seem to incorporate the fact that the Fed might be buying 30 or 40% of them also. So keeping the market happy. So anyway, there you can see it. The dollar is going down, and the Swiss is gaining in value. I guess imagine Canadian will be doing the same thing that way. And then we jump over to the euro this morning. You see the euro is battling its way back into that buy situation. Hit that dotted line we've been watching for months, and bang, hit it and fell down. And it's funny how they always seem to coordinate that stuff. Middle Age, how you doing? Let's see, I like the action in gold and silver this morning. Oh, well, then let's take a peek. Doc is always ready to bootleg and move on to anything and everything. And there it is right there. And that's crude oil, that's right. There is gold. Yay! Yeah, see, gold now survived. See that? Gold survived. It went down, but came back. Or at least, yeah, it did come back yesterday. Now let's give that a little refresh. Whereas silver, I think, actually slid into the sell, but it's just a day sell. It wasn't like they beat up the product in any real way, you know. Right there. Yeah. Oh, that's what it was yesterday. Closed lower, but it gave us a volatility signal, and we threw that. Let's see. Let's give it like that. There we are. Yeah. So it went into the sell there on the 12th. Was lower the next day, but our math turned up again right here, and we put the little green dots over here. And this morning now it's, you know, it's a up and away thing. So yeah, I hear you. Maybe let's see, where was gold? I didn't even take it clear. Oh, look at that! It's heading towards your number. Looks like you're going to get some of your 1850. I like that yesterday. How did you like that opinion of mine? about the London, New York arbitrage. How you aligned your options to that. Hey, Les, how you doing? TGIF. I am happy and glad it's the end of the week. Got so many things to do. I got so many more plants to put into the ground. Farm away. And Stefano, how you doing? Good seeing you here this morning. So yeah, what did you think of that middle age? That you've really aligned yourself perfectly with those squeezes that occur once in a while in the London, New York settlement situation. Usually it's about 2 or 3 weeks beforehand it seems to start up. So you've really come up with I like your option spreads there. All right. So now let's see, what do we do here? Oh, okay. Back to the currencies until someone asks another question. I like that. So you can see there the euro is trying to lift back up again. Let's see how it looks on J4X this morning. Right there. And it's trying to do the same thing. White line is still moving down now. We would can't wait for it to join in with the white line moving back up here. And I'm sure it'll, by the end of the day, more than likely, it will probably do that. You know, because look at the high here and the bar there, and as time goes on, it'll start to shift it and get it to go. Stefano says, waiting for Bitcoin going up. Yeah, what you said is lining up perfectly. Yeah, I've been thinking about doing the same strategy. I have, and I watched last expiration, and it didn't happen, which was a really surprise. Now let's check out Bitcoin for Stefano, and we can also go into the Coinbase. Over the weekend, I'm going to try to do Ethereum and see if the future there is much better, because I really find the Bitcoin future incredibly sloppy. Let's see, it's right here. Okay, right there. It's just too thin. Too thin of an action. Let's see, and also for some reason it doesn't want to do the weekly. I mean, it disappears. Each week disappears, and we're stuck with just the sell signal here, and I can't even see any of the math floating through there. I have to do it by hand calculation to confirm it. But then, then this is accurate, of course, but I don't know why it disappears off the screen. Then maybe it's one of those things where it says just show 1 week or something. I don't know. You can see here they're trying to bounce it today. You got the little green dot. Let me refresh this. There's a little bit more pressure on the upside, but you can see here from our daily signal, it's still a short from here. And see how sloppy this thing moves? Like I said, you can pretend in your head that it's really like a $60 stock, not a $60,000 product or a coin. And so it doesn't feel as insane with the swings when it does that. May I ask, is there a possibility to do arbitrage trading in Forex major pairs with Dukascopy bank brokerage account? Is it possible? Yeah, that's a good question. I imagine, I guess it depends on who you're arbing against, I mean, you'd have to have 2 different accounts where you'd be buying or selling at Dukascopy and then taking the opposite side of that at the other brokerage account, and then back and forth in the sense of that, not that you're delivering, but you're just, and then you would arbitrage it again. As long as you keep them both on, let me think. More than likely, I guess you could squeeze profits out of that, but those days of arbitrage were, I guess, and let me say this about that, my old Richard Nixon statement. Do you need a buggy whip? Do you know what a buggy whip is? Do you wear spurs on your shoes? You know what spurs are? Besides the one, we used to spur people down on the trading floor. But I mean, besides that. In other words, just because they did it 150 years ago or 110 years ago or even, 76, so 24, 44, just because they did it 45 years ago doesn't mean it's a good tool now. Just as we know that volatility, products used to move a half a point a year, now they move half a point an hour. So when you ask about these old ideas, you have to realize you're asking about old ideas. I mean, arbitrage in the 21st century is probably, I guess, if you were trading in black pools against exchanges, you can get away with some type of arbitrage. I'd imagine that. But going from one brokerage house to another and trying to arbitrage, and then you'd be talking about delivering it and the cost of delivery and exercise, and those days are kind of gone. I mean, I don't really, like I said, I can see an arbitrage between black pools and some of those other things that are, under the radar and illegal, but the Securities Exchange Commission allows them to go on still. But I don't, arbitrage is kind of like it's an old concept that has disappeared, in the, I guess you could say, in the electronic age, because when exchanges were, when you bought a product at one exchange and the other exchange was trading it at a different price, you could do the arbitrage. But then when they came up with a consolidated tape where all markets had to be responding, then the arbitrage became more of an arbitrage between derivatives than it was between the actual underlying product. But traders and positions are going through dark pool even with multiple accounts. I can't find my own trades from one broker to another because of dark pool, isn't it? Well, no, the dark pools are unless you're trading those large chunks. If you're an institution, are you an institution where you're trading? You get your execution done. Dark pools are being used. Let's fall back again. Dark pools, for the people out there that don't know what a dark pool is what it is it facilitates execution for institutions who don't want anybody to know what they're trading. If they're buying or they're selling. Okay, so in the beginning, first of all, they're illegal. Second of all, what they did is after 2008 and volume dropped 75%, the Securities Exchange Commission turned a blind eye to them. Okay, because they were just desperate to make it look like life is normal. So they just kind of said to them, look, if you're going to do a dark pool and a private placement like that, you're going to have to report it at the end of the day to get it up on the consolidated tape because it's public stock, and so it has to be reported. And then as time went on, it was like, well, if you report it 2 or 3 days later, that's okay. All along hoping that they just capture the volume on the tape, not the price. Now, the law says that you have to report the volume and the price that moment that it executes because it's a public company. Securities Exchange Commission has turned a total blind eye to it. I think they've written one legal statement about the idea that they are working on it or something of that nature, but it is allowed to go on. So now, unless if you're part of an institution and you're hiding your execution, then there's 47 ECMs out there. There are 47 different places you can execute in the United States. There's like 47 exchanges. So, they're out there. I guess it all comes down to who your clearinghouse is and who they have arrangements with, that type of thing. Who does your execution, so forth and so on. I hope that answers your question. And then back to Dukascopy and the currency arbitrage. You're talking about taking delivery. So if you're an institution, I guess you can take the 2-day delivery and try to arb it. But I don't know if that much volume is out there. I haven't really taken cash delivery in maybe decades, like 2 decades or 3. I haven't taken cash delivery in a long time. I work for a company that have institutional accounts with multiple large brokers. Question mark? Large brokers? Okay. So, looking at a currency arbitrage is really tough, just because of delivery. Doc, can you suggest some reliable website for strategies with CFDs? We're really getting into the weeds here, aren't we? All right. So CFDs, for those that don't know, they're part of the swap universe that institutions do. It's the TRSs and the CFDs. total return swaps or certificates for difference. Um, you know, um, it's fine. It's a and that's another anachronism tool like buggy whips and spurs. I mean, to a great extent, since the creation of listed options, there's not much of a reason for anybody to want to play in that arena. Hence the reason Deutsche Bank doesn't exist anymore, or Citibank, or name any of those major institutions, that are trading at bankruptcy prices right now. They played those games and they're gone. They're pretty much, Merrill Lynch doesn't exist anymore. So they're old tools, and if you work for an institution that likes to play with those things, then they're just missing the boat. They really are. I saw. Let me digress a little bit. I saw an advertisement on somewhere it jumps out. I get these advertisements because I'll look at different programs and so forth. So I get this advertisement this morning. There's a guy. He's standing there. He's got, I don't know, cattle to his right, and he says, he's brilliant that he made, was it like 144%? I don't know, something like that on a trade. He made $1.4 million on this trade, and he's considered a rocket scientist, right? And I'm thinking to myself, okay. I put on a position at the top of the internet bubble for one of the hedge funds that I was an associate with. I worked with, and it was risking $30,000. I put this option back spread on. It made a little better than 66 million. Okay, risking 30,000. Now I have a hard time anybody walking around thinking that they're a rocket scientist, brilliant, and claiming that their claim to fame is that they made like $1 million or $1.25 million as a big institutional trader. To me, that sounds like an amateur. It doesn't sound like a professional. Okay, and so now let me fast forward back to what less is saying and Stefano's talking about. Any institution that wants to lean into those markets are fooling themselves. Here's a perfect example. Let me see if I can find the name exactly. What's it called? It's the young tiger, right? The fellow from that worked with Julian Roberts, and he's out of business now. Swiss Bank is looking like they may lose $10 billion by facilitating trades that are like that. What's his name? Arca something. It was Architect or something like that. It was a family desk. He turned like $4 or $5 billion into $100 billion, and now he's bankrupt. He's not bankrupt, but he's out of business. His business is bankrupt. He may personally still have, his dough on the side. So, I really find CFD, TRS, or arbitrage as anachronisms. Ever since 1976, there's no reason for them. None, zero. They were created in an era when they were doing offsetting. They were created to offset positions with low volatility. We are in an era especially after 2008, but definitely since the 1976, since the creation of listed options, we are in an era of high volatility, and that's why Deutsche Bank is gone. That's why Merrill Lynch is gone. That's why Bear Stearns is gone. That's why Lehman's gone. That's why Lloyd's of London is gone. That's why HSBC is gone. They are around in name only. They don't even exist. They're owned by other entities. You see my point? Yeah, it was a fun backspread. It was on Juniper, and the hedge fund I was with two hedge funds at that time. I was like this associate consultant for both of them. They were like $2 billion funds. That's all they were, and they had legendary names running them. They were their private funds, really. They weren't even. I mean, they had private money. Let's say they were $2 billion funds, and like $1 billion was theirs, and then the rest was just friends and family type of thing, And we saw my math was saying that we're getting to the top. So they said, well, what can we do about it? And I said, well, You know, you pick out one of the most expensive internet stocks. We throw a back spread on, risk about. I think it was actually. I might embellish it. I think it was risk of 27,000. And I said, you know, you risk maybe $25,000 to $30,000. They said, good, go find one. So I went and I figured out Juniper. I was like short the 195s. Stock was trading at like 203. So I was short like the 190s or something like that. 195s, you know, like something like 2,800 times, long like 3,900 times, like the 175 puts. So short the 190 or 195s, you know, like a little under 3,000 times, and then long like, you know, close to 4,000 or close to 5,000. I guess it might have been a higher ratio because I put it on for an actual credit. That's the thing, is I put the spread on, the back spread on for a credit. So I actually took in more money than I had to put out. And and it's not magic, you know, middle age. It's literally a strategy that a lot of pros in the options market trade throughout their lives. It's called a back spread, and you know, it's just like a normal thing. And you know, yeah, I mean, you figure that, you know, you put it on for a small risk like that. In this case here, they had billions, so I figured, you know, what's 30 grand to them, you know, and we put it on, and then Juniper fell apart about 5 or 6 days later. I'd gone into like a weekly sell, and I was in a daily sell, and I was like, okay, this one you know, I was thinking it was going to play itself down to the 140s or 150s. You know, I thought they'd lose 25% or something like that. You know, the stock would. I thought the stock could fall 20-25% over like a 4 or 5 week period. So the back spread was on for, it was like I think it was 2.5 months of option time, 3 months, something like that. So, you know, it's not, trust me, as good as it sounds, and it was, of course, you know, I mean, you know, risking 30 some odd thousand or a little less than 30,000 and getting a return out of it a little better than 66 million, because the stock fell to 26 or 28 or something like that. It didn't go to 145. It kept on falling with the rest of the internet bubble. And so, I mean, before you knew it, the thing is like trading at bankruptcy prices almost. You know, it's like it just went from like 211. Now it's trading at $26 a share. So I mean, you know, you get that once in a while. It happened. I had something like that happen in Motorola. Back in, I got a phone call from my old mentor. His broker, I don't know, not his broker, his floor broker, like, I don't know, lost his mind or something like that. They were trading Motorola over on the American Stock Exchange. And he calls me and he says, you know, have you seen my broker? I said, you know, my trader. I said, no, I haven't seen him in a while. What are you up to? He says, well, he's kind of left me with all these options. He's disappeared on me. He just quit. I said, okay. I said, did he lose a lot of money or something or what? He said, no, I just kind of like can't handle the pressure. Oh, okay. He says, do me a favor. Will you go over and make some trades for me? I said, sure. So he had these calls on in Motorola, and they had fallen down to, back in the day when it was at steenths and eighths and quarters and fractions, it fell down to like a steenth. So he said, you know, close out all these things, but leave the steenths on. I said, yeah, which was not abnormal for our style of trading, because we used to compete against First Boston and CRT and, you know, Susquehanna and, you know, all the private small you know, professional traders, Cooper Neff, you know, all those, you know, and we used to compete against them all the time and do pretty good. And so he kept the steenth kind on it. I guess they were long like 20,000 at a steenth or something ridiculous like that. So I mean, you know, what's he going to lose? I don't know. That's $6. 10 times is $60, right? And 100 times is $600. And so I guess it was like $20,000. Well, it's more than that. But you know, it was like, it might not have been 20,000. It might have been like 10,000 at a steam. Because I remember he was risking about $25,000 to $30,000 still. And you know, he next thing you know, some news comes out about Motorola, and the stock goes through the options. He's got all those options on, and he makes like, you know, $1.25 million or something off of them. So I mean, you know, basically, you know, things like that happen in the I don't think I just put it through the calculator, and I guess what it was is that the spreads had already collapsed. So he really, they were like no bid esteemed. So I guess it was like 12,000. He was risking $12,000, something like that. And he turned out to be like almost $1 million. So let's see. Let me read the tape line. You got me now thinking about some of the old trades and talking about them out loud. Let's see. But trades positions are going through dark pool even with multiple accounts. Can't find. I know you can't find them, which is illegal because if they're trading public stock, it's got to be disseminated. The volume and the price must be disseminated the moment it executes. But they don't. The SEC doesn't enforce that. Yeah, so he says, accounts, I can't find my own trades from one broker to another because of the dark pool. Yeah, I know, it's ugly. Well, who I don't, you know what? Why don't you do this, Celeste? Go through Chicago Quant and contact me through there, and I'll talk, and you can talk to me about who you're using as clearing, or a group that you're using as clearing, and I'll give you an opinion on each one of them without you telling me who you're using. All right, so go through where the hell's it at? Go through Robin, and tell Robin you want to send a message to me, and we can do that through the Chicago Quant. Where is it at? I'll put it up there in a second if I can figure out where to get to it. No, that's not it. Okay. Oh, Magoo. Let's see. Right there. To a great extent, there isn't much clearing going on, really, I would say. I mean, I'm just a wild guess. I got offered a deal on something just recently, and I see that's not it. Let me find where I can push you. Right there, maybe. There it is. Okay, there it is. Here we go. So yeah, just contact Robin, and we can have a private dialogue. This way, you don't have to kind of do your dirty laundry in public to anybody. I think everything's there, right? You can see that right there. There we go. Oh, you can't see it. Oh, Magoo. There we go. So there you go. Just send something over to Robin, and we'll dialogue with you about it. Maybe we can help you out clearing wise. Let's see. Where'd I leave off with that? Let's see. I work for a company that has. Yeah, okay. You see, Stefan says CFDs. I did that. Middle Age says trading buddies. Oh yeah, okay. I'm not sure. Okay, this is where I left off. LSLS. I'm not sure, but isn't that now some of the big banks still trading, like BNP and Probos and yeah, they are, but they're US Credit Suisse is fine. They're in still business, but Barclays I think is also one of those that's owned by the Exchequer. Let me think. UBS is in trouble. Swiss, I think they're talking that the loss will be a year's earnings. So that $10 billion that they lost facilitating execution, I heard that they made $17 million in revenue from facilitating the trading, and now they've lost almost $10 billion for putting those things on. That's why the TR whatevers and the CF whatevers are stupid. I mean, that's the only way to, they're an anachronism of a different era. The only thing you like that, Middle Age? I got a dozen of them. No, I can't put it on the chat line because I don't have this particular computer program signed in. But I just put it up on the chat screen, and I think YouTube will block it anyway. If I chat it on the chat line, you can't. They don't let you put email addresses on there. That's why you got to look at the Chicago Quant Technologies. Just go to Chicago Quant Technologies, and I put it up on the screen there so you can see what the address is. So it's just, yeah, exactly. So, and it was a Middle Age again. I love hearing those old trading stories. Oh my God, there's all kinds of stupid stuff we've done. It was a big play yard. I mean, it was great. I mean, it was, the floors were fun and they were exciting, especially when you knew what you were doing. I mean, I just saw a stat, and I really am like stunned in some ways. Would you believe I just saw a stat that showed that 92% of the people who went to trading floors lost money and disappeared in weeks. So for me to be on a floor from 1980 to being a member all the way up until almost like 2000 is like a super anomaly, and being a member of like half a dozen exchanges is a super anomaly. 92 percentile failure rate. Oh my God, that's wow. I mean, we used to see them come in. Matter of fact, there were some of the older guys, not the older guys, some of the Weasel guys. It's not Weasel, old Weasel. Like what was it? Jeff Yaz, who owns Susquehanna, used to say, we should sell permits for a week. Have, instead of like an exchange seat, just sell a permit for a week where people could come down and trade. We could just get their money. I guess I wasn't paying attention to the stats. I would see bodies come in and out. I just never really paid attention to it. I was trading. I wasn't really watching. But they were like sharks. I mean, a lot of the people on the floor are like sharks. They were trying to find a way to make money off the guy next to them. The guy over in the other pit. They were always trying to find ways of just making any money they possibly could. Whereas my group, we were just trading the markets. We didn't really give a damn about anybody else. I mean, we were just there. The only time we ever cared was the fact that if they let us into a trade or they didn't. When you're standing on the trading floor and someone says, "I got 100 at 80," and they go, "Take them," and 30 guys yell, "Take them." You're just hoping that you get more than 5. That was all I was worried about. Never really worried about anything more than that. I could care less if I never even thought of the idea that let me see if I can take advantage of the guy to my right and to my left. Can I steal money from them or abuse them? I mean, I used to do the opposite. I used to cut them breaks. I didn't try to put them out of business. I kept a few of them in business. They would do stupid things, and I would oh, okay, I'll break the trade. That's no problem. That type of thing. Where we break the trade so it doesn't go through and they don't lose whatever they were losing at the time. And we'd do that in the first few minutes if they had a problem. And if I was just trading my delta, and my gamma, okay, yeah, so it was a little less profit for the next half hour or something like that. That's all. But I'd make it up somewhere else along the line. Just get being a more aggressive person and going after a bigger chunk and adjusting my delta that way, that type of thing. So, yeah, I mean, there's all kinds of weird stories you could, the Kiss and Tell books, most of them try to encapsulate the idea that, you can still do this stuff today. You can't. None of this stuff. That's why, like the TRSs and the CF, the CFDs are an anachronism. They're a joke. You shouldn't. No institution that is a licensed broker should be allowed to do that stuff. I don't even know why. Look at Deutsche Bank. After Deutsche Bank collapsed after 2008, they had to. They had something like 69 or 71 trillion, not billion and million, trillion in those things on their books. And no one, and that's why there was, if any of you out there notice how they tried to merge Commerce Bank of Germany with Deutsche Bank, the federal government, the German government tried to get rid of it half a dozen times, by getting it to merge with commercial. But the debt risk was so great because of the swaps they had on that, no one wanted to get near it. And it was the same thing with Citibank and a few of the others. The swaps they had on were so ugly that, can you imagine? I think it was 71 trillion at Deutsche Bank, 69 or 68 trillion at Citibank, and then other banks were smaller. Like 30 trillion and 20 trillion. They're an anachronism. You can see, like I said, look what happened with that Julia Roberts Tiger. That got blew up his family desk about a month ago, and it's all swaps. Why are they trading swaps? What is it? Why are they so scared? How many times have I talked about it, where I say I'm going to say the scary words, and I always say, all right, everybody close their ears. I'm going to go call, put, strike price, Exploration. Whoa. Yeah, I mean, really? I mean, these guys are supposed to be professionals. Why? And you can see the heads rolling at all these institutions right now too. Everybody, almost everybody who's like in charge of risk or the vice president of risk are gone. They're firing both of them. They've been getting rid of that level. Just getting rid of these people. It's like, matter of fact, I think it was Swiss Bank I just saw, or Credit Suisse. I think it was Credit Suisse that came out and said they're hiring back the guy for risk that they got rid of because he didn't like the way they were doing risk, and the guy that took over his job now is gone because he lost him $10 billion for just $17 million in commissions. And it's like, where is their heads? So, it's just a whole different, I don't understand. I really don't, after all these years, all these decades, how they can still do foolish things like that. And they do it right in front of our faces. And God knows how many more out there are still in those positions, and we don't even know about it because some bank is holding them up because the bank is getting free dollars from the central bank or the Federal Reserve to prop them up so the system doesn't slowly collapse. I mean, it's just, hence why I'm on Dukascopy, because you can't say this stuff in the United States or they think you're nuts. They think you're crazy. They think you're like in some type of conspiracy world. It's like massive evil delusions, what I'm saying right now. Everything I've said in the last 36 minutes over here in the States, they think it's delusional. They think it's, and then they get the evidence sitting right in front of their faces, and they just pretend that it doesn't exist. They walk away. They don't want to talk about the swaps. George Bush, the last one, the son, talked about it in videos in 2005 and 6. He was begging the Congress to change their captured on YouTube and so forth. You think he gets any credit for it today, trying to stop the collapse in 2008? None whatsoever. He's getting none, no credit whatsoever. So it's just and then you fast forward to like just the last month, and I don't know, there's like $50-60 billion lost for people who are making, I don't know, probably no more than, say, well, if Credit Suisse made $17 million in commissions and lost $10 billion from it, then you got to figure that you multiply that by 5. So maybe at best they all made $100 million in commissions, and they turned around and lost maybe $60 billion. So you make $100 million divided by a bunch, and then they all lost like $60 or $70 billion for $100 million in commissions. It's like, who hires these people? Really, who hires these people? Anyway, let's see, where are we at here? You got me on a tear at this point. Let's see, where am I at and what am I doing? Oh, I must be still at the nursing home and this is all fantasy. Here comes the nurse. All right, where are we at? Where did we leave off? Up on the screen we have Bitcoin, that's right. So I'm going to try to put Ethereum in there over the weekend and see how that looks. It's been trading for about 2 months now, so we might get some good data. All right, let me think now. What's the next thing here? Where do we go from here? Oh, back to the currencies. I want to see what Turkish Lira is doing. Let's see what that's doing. I think I missed Canadian too, didn't I? No, I didn't. That Canadian's after that. So there's Turkish Lira. See the dotted line? It turns it down. Stop. I wanted to go after my dots. Let's make those even bigger today than yesterday. There they are. They're bigger. Come on, go after it. It'll be like a magnet. It pulls up. You can see it's going into a weekly buy. Today, looks like it'll close in a weekly buy, tonight. The full confirmation. It's been pretty much through it all week long and showing the strength there. Let's see, Stefan says, Doc, did you check the oil versus the CAD, the CAD dollar? No, not yet. We're going to do that right now. Right there's CAD. And CAD is coming back, which I kind of thought would be to some extent because of the way Swiss is dropping it up. Let's give it a refresh. It hasn't broken the zero line, but it's close. Let's see how it looks over here on the that, and then we'll do the other. Let's see, right there. No, that's British pound against the Japanese yen. All right, there you go. And so here is dollar Swiss there, not dollar Swiss, dollar Canadian. They're still showing some strength here on the J4 action. You can see my work is trying to show strength right there, but you can see we're rolling over now, and we're still in a weekly sell. So, and we've been in that sell from here. So I imagine the pressure's on. It's going to still move down. And then crude oil. We put out the last chart went out last night. We thought it might have gone into a daily sell. That's why I had it on the spreadsheet that way, but it didn't. It's still in the buy. Let's go back to the crude oil again. Right there. That's it. And it's showing some life in there too. And that would make sense. The Canadian is moving down. And I would imagine, let's just take a look at NASCAD. Right there, there's NASCAD. I'm sure that's moving up. Yeah, see, that's moving up too. The lines have not gotten there yet. You can see that. And we're still bent over in the weekly. It's going to be another week, and they're cutting through the time manifold too. But the one thing that's well worth reminding everybody is look at the way the nonlinear time manifold. That's the yellow lines. Let's make them a little bit thickerish. I'm going to make them nice and thickerish like that. There we go. The time manifolds are they're mirror images, and what's happening is that the white line is the second standard deviation to the black histogram. So they both are always plus or minus when they're gas line 3. Now in this case, this is a super, but you can see we're not following the green. Want to see what the green looks like? We'll put the green in there as a dotted line. Let's go like that. Is that it? Let's make it dashed. Maybe it'll be a little bit clearer. Maybe make it darker. Ah, there it is. Okay, okay. So that's the 5. We're not really watching the 5. But I use that against the time manifolds to get flavor. Notice that when they top out, like in this case here, it got up through the time manifold and started breaking down. But then the white line pierced through it again. And you can see the launch lift up again, you know. It bounced. They both like skidded off the time manifold. And in this case here, you know, they're breaking down through the time manifold, which is obviously a warning that there's pressure on the downside. So what we want to see, obviously, is, you know, when the time manifold, when a line goes through the time manifold, as it did like here, then it starts to, the 5 is the super, and that's what the green line is. I don't always have it turned on. You can see the strength starts to kick out here, gets through the time manifold, you see the strength start to come back, and then the 3, which is the white line, starts to accelerate. And then you can see like this stair step thing go on with that move up in there, and then we go into a weekly buy. So it looks like the pressure's still on because look at the green line, it's still rocking south. Matter of fact, let's see if we can see if it's curved at the end there. Nah, see, it's still heading south. And that's what these are, is just second standard deviations to the histogram. So there's the checking of that. Let's see, did I answer everybody's questions? Isn't these banks that against facts you mentioned, calling it conspiracy theories, doing these things as internal colludes to shift the shareholders' funds with schemes? Yeah, but the SEC allows that to go on now. They don't care. It's just like, remember private placements, how private placements were verboten? That's for the German friends out there. You know, they weren't allowed. And then now they're letting private placements all over the place. Private placements are just loaded up now. You know, when the collapse of 2008 has stolen 75% of our volume, okay? And so, you know, to make the world look normal, they had to allow high-frequency trading, and they had to allow black pools, and they had to do anything they could to try to lift the volume up. We're not making record volume to any great extent anymore. I don't think we've seen now. There's no doubt that the NASDAQ sees most of the volume now, but then they are the main thing. It's the New York Stock Exchange, which broke volume records for 150 years, and after 2008, it probably hasn't broken a record since. You know, so I mean, it's bad. It's just bad. Now the Nasdaq. Matter of fact, what's interesting, options keep on breaking records every year because that industry is still growing because it's a safe place to be. And obviously you can do stupid things with options just as easily as you can do them with TRSs, or any other swap. I mean, so yeah, are they dangerous tools? If you use them wrong, of course they are. But that doesn't mean you don't use them. I mean, look at the binary industry now. The binary industry has made it safer to use the listed options. Dukascopy does binaries. It's safer. You're buying something, you're selling something together as one product. You have a limited amount of risk. Let's put it this way: if they were doing binaries for that family desk, Credit Suisse would not have a $10 billion loss. They would have more like maybe a $30 million loss or something like. It would be that drastic. It would be that drastic. They would nowhere near have lost the amount. If they lost 100 million, I would be surprised. If I had a chance to look at the actual position these clowns put on for $17 million in commissions to lose $10 billion, I'd be like, are you out of your mind? I've seen this stuff. It doesn't take more than seconds for me to know if it's right or wrong, not minutes and days. I've told you the story where my one institution asked me to look at an option strategy being offered by somebody. And they wanted to give me 2 days to look at it. And I said, it's going to take me like 2 or 3 minutes at most. Oh no, you have 2 days to look at it. So they send it over to me, I look at it, and as soon as they send it over to me, I can see what it is instantly. I call them back in less than 2 minutes and I go, I got your answer already. Are you sure you have the answer? Yes, I have the answer. It's not complicated. And so I explained to them what it is. It was Bernie Madoff's fund that was doing it. I said the first thing I said is, don't talk to me, hang up on me, and call the Securities Exchange Commission and tell them some bozos out there telling them they can get you 14% or 12% return on split reverse conversions. That's all it was. He was doing reversals and conversions, making legitimate money. When interest rates dropped, he had to go to split reverse and conversions, which meant you didn't use the same strike, you used the two outer strikes. And that's a 50-50 play. There's no way in the world you can guarantee anybody 14%. Now, doing a reversal and a conversion, you can guarantee 14%. But you can't do it doing split reversals and conversions. What they said is, forget you saw it. That's what their answer was. Forget you saw it. I said, why? You should report them. No, just forget you saw it. All right. I'm not licensed. It doesn't matter to me. You're the clowns that are licensed. So anyway, let's see. Isn't these banks against? Yeah, that's right. Okay. And Stefano says, Doc, did you check the oil? We did. Oh, let's go versus CAD. Yeah, let's go check that out. You guys got me really rambling on Friday here. Yesterday was the same way. I was doing a lot of rambling, wasn't I? The inflation battle. There it is right there. We kept it. And there it is. And still in the sell. And see, they got the volatility signal yesterday. Right there. Right there. Can you see it? Yeah. And then, I guess they're about unchanged on it, is it? Let's see. So yesterday it settled at 46.94. And today it's trading at 46.72 with a 70 low and just traded 71.6. So it's still in that sell from all the way back here. So since April 21st, it's been in the sell. And it tried to go into a buy here, and the volatility signal stopped it. And the next day they clocked it. And then again, yesterday it tried to give us a volatility signal, and they opened it up. You can see that it was firm and made a high and took out yesterday's high, and now it's below the close of yesterday. Let's see. Okay. Now the oil connection, did we relate to that as an oil connection? Let's see. Yeah, I guess that's what, I didn't get a chance to look that up. Maybe over the weekend when I'm trying to do Ethereum, I'll do that too. I got a lot of plants I got to get into the ground. Let me think. Let's see. So euro against CAD, it's going down. Oil's been going up, right? Let's go take a look at oil. Let's do this. Let's put oil on Dukascopy on the J4X. So there's light sweet crude on J4X on a daily chart. You can see to a great extent it's been going up like this has been going down. Remember, this topped out in the, where was it? The April 21st area. And this kind of bottomed out in the, can we show you that? There it is. What is that? That's April 25th. And what was that like a Monday? Or let's see, what was the day? Let's scrunch this just a little bit. So there's the 22nd. Yeah, so it did the same thing. So it kind of bottomed out in the inverse. You're right. It's got that same characteristic. You know, Stefan, that's a good idea. We can keep a track of that too and see what's going on with the energy market and see if it catches the turns. Now you can see the strength that kicked out in this Euro Canadian right here. Oh, we're blocking it now. Right there, you can see that strength. And we saw weakness, right, in the crude, right? Yeah. So it's matching up. You're right. It's a good tool. Maybe even better in some ways than a New Zealand CAD. We'll keep an eye on that. It does look like it has a legitimate connection. I agree with you. Let's see. Where are we at now? Sorry, did you check the... Okay. Check first of the No 20th, April 21st. Oh, okay. Let's go see what November looked like. Yeah, so okay, there it is. The plateau, November 20th area, like that. And there it is right there. So yeah, that big plateau, I guess that's the bottom, isn't it? It matches up to the weekly that on my work. And then there is where's November? Here's November. Yeah, it does. You're right. Matches the bottom. And you can see there's the bottom in November 1st. But it was banging it along there, right? Yeah. It matches up. And then when we go over to Chicago Quant, you're right. It does. It matches up. You're right. It's a good... you're really right. It's definitely it's something to really take serious. I'm going to pay attention to it more. What am I trying to do here? Oh yeah, I know what I want to do. I want to go over and look at the... I want to see our crude oil situation on the weekly, because it was in a weekly buy until there. See where it went into a buy, sell, and then sell, and then went into the buy in late November again throughout that whole bottom, the same way it topped out. You can see it on, or no, where is it at? It's over here. It's right there. Where is it at? Oh, I know it is. It's right there. There it is. So yeah, as it topped out here, the same time period. See that? It's above each other. So let me see if I can move this up a little bit more. Oh, now it made it the whole screen. Oh no! What did I do wrong there? Is it there? There we go. There we go. So like that. And so you can see the bottom here and the top there. And there is the beginning of the year. And you can see the movement here. It's definitely like, what's that? That's December. And then right there is December right here. There's December. And this goes and makes another high. And this is already reversing itself. It's making a high also. So it lags a little bit. Notice that? The crude oil actually lagged. No, crude oil was ahead of the curve. That's what it was. Okay. That's what it was. And then we went through all those capitulations. Yeah, in the daily time frame. Exactly. So yeah, you're definitely pointing out something really, really solid. That's why we're an electronic trading pit here, where we all talk ideas and try to discover what we're really looking at. That's exactly it. I mean, that's the name of the game. And that is, to me, is the most important thing, is exchanging ideas. I guess it was Judge Judy, one of those TV shows, where they have a TV judge. I think she was an original judge at one time, and now she's retired and she does a TV show. And she said that political correctness removes opinions, and opinions are important for ideas to grow. So that's exactly where we're at the moment. You know, we need Pitt's ideas to be discussed, wrong or right. How many times have I said, you know, there are no wrong answers in trading. There are only there are no wrong questions in trading. But there are short or long answers. That's all you get. In other words, you ask a question if it's really something important and, you know, predictable and coherent and the whole bit, and you can dissect it, understand it, then it'll come out with a, you know, a nice, quick, short answer, or possibly even a long answer. If it's a really bad question, it might have a short answer, but everything deserves the right to have a question. You know, the questions are important because you don't know where they're going to lead to. How many times have we, like here, Stefano starts off with looking at Euro CAD. We haven't looked at that in probably 9 years or something like that. You know, and you know, maybe a year. Never even thought about the idea of putting it with the Canadian oil market combination. There it is. You know, it's a definite tool that's well worth paying attention to for oil traders, without a doubt. You know that middle age, probably worth for option trading. You know what I mean? Probably gives some good direction in it. Since you're already NYMEX already, you might as well just do one more NYMEX option. And they are liquid. They're very liquid, the options over there on NYMEX. So, just a plug for options. Or binaries. You know, Dukascopy does binaries. Same tool. It's just safer, that's all it is. And the longer time frame, the better. All right. What else we got to say around here, traders? I guess we got to come up with a title. What kind of title should we talk about today? How about oil versus Forex? I like that. I mean, we could scare people and actually say something like, you know, binaries and options. But that might scare people, not even be willing to look, you know. Honest to God, it blows my mind all the time. Now, what is the malfunction here? I can't find a way of sending now all of a sudden. It becomes a challenge. All right. Anyway, traders, we will catch you on TGIM. Thank goodness it'll be Monday. You guys have a safe and smart weekend. Thank you, Stefano. Everybody have a safe and smart weekend. We will catch you on the flip side. Happy trails to you until we meet again. Happy trails to you, to all our trading friends from this great cyber pit from Dukascopy. Catch you all later.